Hello, traders, and welcome to this new market update. I hope that you've had a wonderful and profitable week and month and year, and I hope that you've been doing very well in your life in general. So let's get started. Anyways, my name is Mehdi. I am the host. I am the host of this, of this channel, and I am the only person behind, this channel. This channel is about, trading, as you might expect, and it's mainly it has mainly been started because I thought that I could help you and others, I mean traders, to better trade and also to be able to make money trading as I've been doing, because I've been trading for 4 years and it took me 1.5 to 2 years, to start understanding, to start becoming, profitable. It's a long journey, and during this journey I think it's very important to give back, as soon as you are able, you've been able to crack the code and to understand the inner workings of trading, well, at least part of it that allows you, to be profitable. Okay, so today we are going to I'm going to give, an easy to trade, pair. This is one of the easiest opportunities and easiest opportunities to understand, and also, to trade for the coming week. Okay, so this is a buy opportunity, and this is the GBPY. First of all, what is the opportunity? Okay, so the opportunity is about trading, this double bottom. Okay, so we are going to trade a big double bottom, or if you call it a divergence, you can call it a divergence, but this is, like a divergence because price has been going down. But if you look at any indicator or oscillator, you'll see that the oscillator is showing you, like a bullish divergence, which is the oscillator would be going, not would be making not lower lows but higher highs. I don't want to show you to cluster my screen with lots of oscillators, etc. So I wanted to understand what's important, because this is not the main information, but let's get rid of these two. Okay, so you've seen this double bottom. Okay, next, what do we have? Okay, so next, what do we have? So when we have, a trending move, what do we do usually? We plot retracement, Fibonacci retracement. We use a Fibonacci retracement tool to get an idea where we are, because we need to understand where we are before understanding where we can go. Okay, so we are getting an idea of where we are, and as you can see, the 3.8 level of Fibonacci has been broken. Okay, so it has been broken and price is sitting above the level. Okay, so price is sitting above the level. Next, the next information that you can find in this chart is that we have also, this is not very important, but still can show you, like what price is doing. Okay, what do we have here? We have that price has broken out of the trend line. Do we agree? Yes. Okay, so we have broken out of the trend line. Next thing, what do we have? We have a first impulsive move. This is not a correction, and you can clearly see it. This is not a corrective move, this is an impulsive move. So we have an impulsive move, impulsive move, and you should remember, I'm not saying it, but statistically, okay, we have a first impulsive move. Statistically speaking, and this is not something that I come up with, but I'm an engineer, and I'm trying to use as much data as possible statistically. A statistically first impulse is followed by second impulse. Okay, so ABC. Statistically, a first impulse is always followed by a second impulse. So I expect price, like after this first impulse, which you can say that has ended here, you can say that price would go to retest this high. Okay, so right now, the most probable scenario right now, because we have, let's go to the 4 hour and see the details of the move that we have here. So right here, like we have price, like correcting. We have price, like doing a first correction, then making a new high, but then correcting back down, which makes us a very, book expanding flat by the book. Very easy to spot this. That's why I'm saying this is very easy to spot. And before we had an impulse, and then we have an expanding flat. And here what we have the start, and you can see it clearly here. We have the start of a an impulsive move. Okay, so this is the second impulse information. Second impulse being formed. Okay, so this is the second impulse being formed here. Okay, so what will you have? So the most probable scenario is that we won't go back down. We won't like close below the 38.2 like percent Fibonacci retracement, but we are going we are going to close we are going to close above it and then continue back higher. So we might even correct a little bit here, but then we are going to continue higher. So this is an easy buy, and just place your stop loss below or around this level, and then you buy. Okay, and you'll have at least a 2-to-1 profit to risk to reward ratio. Very low risk trade and very high potential, because you might get a move equivalent to this one. Okay, thank you, and I will be back with another video. Still have 3 videos to do for today.